Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. Commodity prices are falling away across the board, along with crypto, as a risk-off mood builds in financial markets. In the week ahead, the most interesting developments will be close to home. There will be the usual monthly dump of February data from the RBNZ later today, and the real estate industry will start reporting its March results and listing levels. And in Australia, their central bank will be reviewing its monetary policy settings, but because they're in an election campaign, it would be surprising indeed if they make any moves either way that might influence voters. The week will end with the American labour market data for March, but because the impacts of the Doge cuts or tariff hikes are yet to be felt, little change is anticipated here either. But more PMI reports will start to reveal new order levels, which will give important early warning signals. There will be PMIs out for China too, Japan business sentiment, EU inflation, and German factory orders, which will all help paint a picture of how the global economy is coping. But first up today, there'll be a lot of interest in tomorrow's Wall Street Open. It ended its Friday session with the S&P 500 down 2% and no signs of late recovery in that session. The Nasdaq fell 2.7% on the day. Weekend futures trading has the S&P 500 recovering 0.8%, but that basically embeds the Friday retreat. Risk-off sentiment is strong, with major investors selling, seeing this as a time to hold cash. The core reason Wall Street is risk-off is that American consumers are increasingly anxious about their jobs and the inflation pressures ahead. And both of those worries over what higher tariffs will do to them. Town hall meetings across the country are giving the message to Congresspeople that they aren't too happy about the self-serving government by billionaires either. The final University of Michigan March sentiment survey was revised lower from its already low flash result. Consumers are in full defensive mode, expecting inflation to jump and job security to worsen. Wall Street can't ignore these signals. Other data out over the weekend didn't help. The core US PCE inflation indicator for February rose its most since January 2024, and of course this doesn't include the effect of the recent policy missteps. This data is a little signal magnified by current policy settings. US consumer spending came in lower than expected too. Consumer savings rates rose. This is consistent with consumers shifting to a defensive mood ahead of their expected rough economic weather. It isn't any better in Canada, where their monthly GDP indicator for February revealed no net expansion, following a positive January expansion. In China, talk about rate cuts that officials don't like brings prosecution. They say, quote, the local public security organs, unquote, have dealt with 2 such people. In Australia, they're often running for their May 3rd, 2025 federal election. Like most elections, will be fought on cost of living issues. The campaign starts with the incumbents in a strong and rising position on their 2-party preferred basis. Expect a sledge-a-thon for the next 5 weeks. Commodity prices are under pressure. Worth watching is the price of copper. It is very high at present, but lower economic activity in both China and the US could bring about a collapse, say some. It would not be the only commodity to suffer. And we should also possibly note that the US Fed balance sheet shrunk again last week to be $745 billion lower than this time last year. So far, we haven't seen any slackening in the pace of their tightening. And we should also note that in this risk-off phase, the US dollar has not risen. This is very unusual and may portend a diminished role for the greenback in the global economy. So far, the world has kept buying US Treasury paper, but the more federal finances are twisted by Trump, the less likely that demand will hold. But remember, less than 24% of total US federal debt is held by foreigners, so the impact from foreign demand will be muted. However, markets will notice any substantial pullback by this group, and that will colour its market status and price. The big impacts will come from the locals' willingness to absorb this debt. The US Treasury 10-year yield is now at 4.25%, unchanged from Saturday at this time. And the price of gold will start today at just on $3,085 an ounce, and up another net $5 from said day. Although offered at the moment, gold keeps challenging its all-time high levels. Oil prices a little change from Saturday at just under $69.50 a barrel in the US, while the international Brent price is now just over $73.50 a barrel. And the Kiwi dollar is now at 57.2 US cents and unchanged from Saturday. Against the Aussie, we're unchanged at 90.9 Australian cents. Against the euro, we're also unchanged at 53 euro cents. That all means our trade-weighted index starts today still just over 66.7. And the Bitcoin price starts today at $82,272 and down 1.9% from Saturday. Volatility over the past 24 hours has been modest at plus or minus 1.1%. You can find links to the articles mentioned today in the show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.